So with all this tariff talk, a lot of individual investors are asking me, Alan, should we still be investing in the US? I guess the quick answer is absolutely. If you're investing in a company that is domiciled in the US, has factories and business in the US, then they're not going to be affected by these tariffs, or at least not directly anyways. A lot of people have been asking me about, for example, automotive parts, Magna. Magna has a lot of facilities in the US. And if they're able to keep their US facilities separate from their Canadian facilities, then perhaps maybe Magna will be not as affected as many people think. Now, of course, the auto industry in general will be affected. And so indirectly, a name like Magna or Linamar will be affected amongst other companies that do business or are involved with business around the auto industry, manufacturing of many different things cross border to the US every day from Canada. So yes, it's going to affect things, but should you continue to invest in the US? Well, I think the next chart or graph really shows that the answer is yes. And this is a chart on US equities dominate the value of global stocks. And even if you can't see what it says on this chart, just look at the orange. The orange is the United States. That is how much they dominate the value of global stocks. That is 67%. So if you're not invested in the United States, look how much of this pie, if you will, of this circle, you're not going to be invested in. How can you not be investing in the largest economy in the world with over 20% of the world's wealth flowing through the United States borders each and every day? You're going to avoid investing in the United States? Now, some people are going to say, well, our dollar, right? If you have Canadian dollars, how do you invest in the US? You lose 30% right off the top. Maybe so. But when you sell that US stock and convert back to Canadian dollars, if that US versus Canadian dollars is somewhat stable, let's say, in 6 months from now, you sell and you move money back to Canadian dollars, and let's say US Canada currency is still at 70 cents, well, the money you lost when you bought, you'll make back when you sell pretty much. And so really you're looking for opportunity and you're looking for good quality investments, and many of them, some of the biggest names in the world, some of the biggest tech names, some of the biggest banks, some of the biggest manufacturing international companies reside and are domiciled in the United States. And I think you need to still be there, or at least consider being there and buying good quality investments. You want to look at our next chart. If you decided you didn't want to buy in the United States, well, you wouldn't be able to own a name like Meta or Facebook. I can tell you that Meta just set a record. I believe it's a record, modern day record. This stock has been up. Prior to yesterday, it was its first down day since the middle of January. As you can see here, what kind of a run it's been on. Stock was up 20 trading days in a row. You don't want to invest in the US? You can't invest in a name like Meta. Meta is at all-time highs right now, and people still believe that the value or that the stock is relatively cheap. A name like Palantir. I've been asked about Palantir Technologies. Palantir produces a software that helps big organizations and the United States government in particular analyze data that's coming in from all different places. It's able to bring in this data, analyze it, make sense out of it, and be able to give you an action plan based on this data. And as I said, Palantir had fantastic earnings. Now, those of you that are asking, should we be buying Palantir? It's extremely expensive, trades at well over 100 times earnings, yet the stock continues to go higher. Perhaps you can't measure Palantir on an earnings per share basis, but overall, I would definitely not say Palantir is cheap. And as you can see by the stock price, it continues to move a lot higher. So should you be invested in the United States? The answer is yes. There's going to be a lot of talk and continued talk about tariffs, reciprocal tariffs, tariffs on many different areas. But at the end of the day, until the president signs these tariffs into order, until we get a definitive answer on what is being tariffed, how much is being tariffed, are there any carve-outs for certain industries or carve-outs for certain companies, we're just going to continue to stay the course. And to stay the course, in my opinion, to grow a portfolio, to grow your wealth over time, you need to be invested outside of Canada. And what better place to be than invested in the United States?